listening to these guys try to not say what they really want to say.
What do you make, and you mentioned earlier, the meme stocks?
And how you use your leverage and what you invest in.
The richest man in the world that has so many women seeing red. A respected hedge fund billionaire known mostly for his philanthropic work is making headlines this morning for what he said about working moms.
Tudor Jones is one of the most successful hedge fund managers of all time. He is known for his macro trades, particularly his bets on interest rates and currencies. He is also a vocal advocate for philanthropy and has pledged to give away most of his wealth to charitable causes. Tudor Jones was born in Tennessee in 1954. He graduated from the University of Virginia in 1976 with a degree of economics. After college, he worked as a cotton trader at E.F. Houghton & Co. In 1980, he founded his own hedge fund, Tudor Investment Corporation. Jones' investment philosophy is based on the belief that macro trends are the most important driver of market returns. He believes that by identifying and investing in these trends, investors can generate significant profits. He uses a variety of factors to identify macro trends, including economic data, political events, and central bank policy. He also relies on his own intuition and experience to make investment decisions. Once Jones has identified a macro trend, he would look for investment opportunities that will allow him to profit from the trend. For example, if Jones believes that the interest rates are going to rise, he will look for investments that will benefit from rising rates, such as bonds. Tudor Jones is willing to take large bets on his investment ideas, and he has known to make bets worth billions of dollars on a single investment idea. This willingness to take risks is one of the reasons why Jones has been so successful as a hedge fund manager. Tudor Investment Corporation is a global asset management firm headquartered in Connecticut. The firm manages over $15 billion in assets and has offices all over the world. He has generated annual average returns of over 20% since founding his hedge fund. He's also one of the wealthiest hedge fund managers in the world with an estimated net worth of $8.1 billion. Let's dive right in his early life and how he got where he is today. He was born into a well-established family. His father, John Paul Jones, was the president of the Compton Merchants Association, and his mother, Mary Jones, was a homemaker. Growing up in Memphis, Jones displayed an early interest in the financial markets. His father's involvement in the cotton industry likely played a role in sparking his curiosity about commodities and also helped him get his first job. Jones attended Memphis Presbyterian Day School and later on attended Memphis University School. Despite facing difficulties with dyslexia, Jones was a talented athlete, competing in both track and field and 1971 National AAU. The determination and discipline in sports would later influence his approach to trading and investing. After high school, Jones enrolled at the University of Virginia, where he continued to exhibit his athletic prowess as a member of the university lacrosse team. His academic journey at UVA laid the groundwork for his future success in the financial industry. After completing his education, Jones started working in the brokerage industry. His early career involved in working for various firms, gaining experience in commodities trading. Jones' career took a significant turn when he began working for Eli Tullis, a cotton trader and one of the pioneers in the commodity trading industry. Working under him, Jones honed his trading skills and developed a deep understanding of commodity markets. With an initial capital of $30,000 in 1980, he began trading commodity futures on his own.
It's a composite of the stock market, the dollar, credit spreads, and it's a very good indicator of the general strength of the overall economy, a good proxy for it. So,
his early success was notable, particularly in the volatile commodity markets. His trading strategy often incorporated technical analysis and macroeconomic factors and gained him a reputation for his ability to anticipate market trends. Here's a serial look in one of his most notable investments in the Black Monday in 1987. Jones made that fame was bad by believing that the market was overvalued and was due for correction. He then shorted the S&P 500 index future contracts, and then on October 19, 1987, the stock market crashed. losing 22.6% of its value in a single day. He profited handsomely, netting in over $1 million, and it's actually shown in one of his documentary movies called The Trader. Funnily enough, Paul Tudor Jones tried to buy all the copies of this documentary because he felt that he was giving away too much of his secrets. Japanese stock market. In the late 1980s, the Japanese stock market was booming. However, Jones believed that the market was overvalued again and was due for a crash. He began shorting the Japanese stock market in 1989. The market actually crashed in 1990, just 1 year later, losing over 50% of its value. Jones again earned a substantial amount of money from this trade, netting in billions of dollars. The dot-com bubble. In the late 1990s, the dot-com bubble was in full swing. However, Jones believed that many of the dot-com companies were overvalued and were due for correction. He began shorting this Nasdaq index in 1999. The dot-com bubble burst in 2000, with many dot-com companies losing over 90% of the value. Jones' bet paid off once again.
I always wanted to be a millionaire or a movie director.
So you chose millionaire?
I don't know if I chose millionaire. I ultimately got to that.
Over the years, Tudor Investment Corporation evolved into a diversified investment management firm, expanding beyond commodities to include various asset classes such as currencies, equities, and fixed income. The firm's success led to substantial growth in assets under management, making Paul Tudor Jones one of the wealthiest individuals in the financial industry. However, it wasn't without challenges. Paul Tudor Jones faced a particularly challenging period in the early 2000s, marked by both personal and professional difficulties.
Important to the least important, so that at any point in time you can chop off the paragraphs from the bottom all the way up and still have something that logically follows through. Magazine writing is where you tell a story.
One of the significant events during this time was the poor performance of his fund. Here's why. The bursting of the dot-com bubble in the early 2000s had a substantial impact on the financial markets. And right off the bat, Jones actually made a substantial profit on the burst, but then 2001 and 2002 were really difficult years for his performance. He also saw a lot of people actually withdrawing funds from his hedge fund because from 2001 up to 2008, Jones didn't have much of a good performance. In response to the challenge, Jones and his team went through a process of reassessment and adaptation. This involved making changes to the fund's strategy and risk management approach. In subsequent years, Tudor Investment Corporation managed to recover from the rough patch, and his team made strategic adjustments and the fund returned to profitability, demonstrating resilience and adaptability. That was an important period though for self-reflection and re-evaluation of his investment approach. Outside of the financial markets, Paul Tudor Jones is known for his philanthropic efforts. In 1988, he founded the Robin Hood Foundation, a charitable organization dedicated to alleviating poverty in New York City. The foundation has since become one of the most prominent and effective charitable organizations, raising and distributing millions of dollars to support various poverty-fighting initiatives.
The other codger, Joe, on this group, he probably remembers it like I do because I think he's my age. But we've just never seen anything like this since the 70s, so it's really uncharted waters. I like to think of it as a crosshatch ocean.
Jones is also actively involved in environmental conservation efforts. In 2013, he launched the Just Capital Initiative, which aims to encourage corporations to prioritize ethical business practices and social responsibility. Paul Tudor Jones is known for his private and low-profile lifestyle. He married his first wife, Sonia, in 1980. They had 2 sons together before divorcing in 2005. He married his second wife, Jolie, in 2005. They had a son and a daughter together. Jones has spoken publicly about his struggles of marriage, saying that he has failed at marriage twice. He has attributed his marriage problems to his work-life balance, saying that he often put his career ahead of his family.
About where you were in your life that ignited that spark in that moment.
There was probably a hole in my soul, and I didn't really know it at the time.
Here's some famous quotes from Paul Tudor Jones. The most important rule of trading is to play great defense, not great offense. Don't be a hero, don't have an ego. Always question yourself and your ability. Don't ever feel that you're very good. The second you do, you're dead. At the end of the day, your job is to buy what goes up and to sell what goes down. So really, who gives a damn about peace? I believe the very best money is made at market terms. Everyone says you get killed trying to pick tops and bottles and you make all your money by playing the trend in the middle. Well, for 12 years I've been missing the meat in the middle, but I have made a lot of money at tops and bottles. The most important thing for me is that I don't want to be doing what I'm doing unless I'm giving 100%. I don't want to have to worry how it's going to affect my family or me personally if I am down a year. I hope you like this short biography of Paul Tudor Jones, the macro gambler. If you did, please sign up to the channel, and until next time, thank you very much.